Hey, good morning, everybody, and welcome to Friday, July 12th. Good to see everybody. Glad you're tuning in. Hey, again, I want to mention if you like what we're doing here, please like and share our page and also share this video with your friends and family. I want to share also our continued report in terms of retirement strategies. Retirement's one of those things that is a one and done deal. Once you're done and you've decided you're going to retire, unless you're going to try to go back to work somehow, you got to live off of what you've been able to put away. And so we've put together a retirement strategy report that we'd like to get out to you. All you have to do is text the word retirement to 863-285-3815, or you can even text or hit the link in this Facebook post, and it'll take you right to the page where you can get the free report. Dave will be with us in just a moment after we've hit record highs yesterday on the Dow Jones.
7 Light FM. It's Katy Perry there. Hi there, and good morning. Glad you're here today. How's your money treating you so far? Oh, you're a millennial and you live on an allowance. Okay, you got it made. Beyond that, the rest of us are looking at Wall Street and going, how's our IRA and our 401k? Phillip Statler's on the radio with us from the offices of Statler Financial Services, downtown Sebring, and we'll tell you how we're doing. And yesterday, the answer was a little better than you and I expected, right, Phillip?
Yeah, it was. It was a pretty good day yesterday, especially on the Dow.
Absolutely. We hit a new record on the Dow. We were up 227.88 points, 0.85%. That's a new closing record. Standard & Poor's, you and I are both kind of searching through our memories, and we're both reasonably sure that 2999.91 is a closing record, but the S&P has been higher. You said the 10th, we actually got over 3,000 once, right?
Yeah, we did. I think we've gotten over twice now, on the 10th and the 11th. We hit over 3,000.
And that is just kind of nosebleed territory, given the fact that we're hearing about a slowing economy. But the price earnings ratio still kind of back up the notion that if everything were normal, if there were no concerns, there is room to grow. But what confuses both of us is there are so many little flags on the side of the road saying the brakes are going on. Investors don't seem to have noticed, do they?
It sure doesn't seem like it, and I think probably interest rates are playing somewhat into that whole picture, Dave.
I didn't have a chance to hear Paulson's testimony in front of the Senate yesterday, but I can almost tell by the closing numbers the markets liked what he said anyway.
Well, they did, and I continue to watch interest rates. The 10-year had a pretty good tick up. They're trading down just a little bit this morning, but they're still up 2.13%. We're still seeing though some inversion. The 2-year is at 1.87. The 1 year is at 1.98. The 6 months at 2. So we're still seeing some inversion in those shorter term rates. And it's going to be interesting to see how that continues to kind of flesh itself out.
Yeah, it's actually kind of strange. You get a better interest rate on the 3-month T-bill right now than you do on the 10-year Treasury note, and that's just one of those things that makes you want to bang your head against a wall somewhere, doesn't it?
Yeah, it does. The 1 month is the best deal out there right now, except for the 30-year.
Which is strange to say the least. Generally, though, a rise in the basis point yield on interest rates from federal bonds, that tends to indicate a little bit more confidence in equities, which from the standpoint of people looking to make their investments grow, not a bad sign, I'd assume.
No, and I think that's probably what we're seeing finally some money moving back into the marketplace. Obviously, we're seeing some record highs across the board. I thought it was interesting. I was looking at an article that kind of outlined the Dow and what was kind of making up those numbers. If you go back to January 17th, 2018, not 19, 2018, the Dow first closed above 26,000. So it's taken basically a year and a half to get us back to that number, or over that number, to the next $1,000, to the 27,000 mark. And I thought it was interesting to see what companies were making that up. So Microsoft in that same time period was up 53%, Visa's up 48%, Cisco's up 39%, Nike's up 38%, and Merck and companies up 30%. So those top 5 companies or so have done pretty well in picking up the pace of the Dow.
It's kind of interesting. Granted, it's a small sample, but that's not really a non-diverse lot of companies either. I mean, you got some consumer, you got some retail, and you got some high tech in there. It's kind of a collection of companies, albeit a narrow sample.
Yeah, it is. You're right. And so it's going to be interesting to see if that can continue and how it does do, because I keep saying, and I was talking to somebody yesterday, it's like, what's got this thing continuing to move upwards, and at this point it may be low interest rates.
Understood. Yeah, I think folks who listen to us regularly know my instinct is on the bullish side of things, but even I'm sitting there saying the signposts on the road are saying that there's some weird junk going on, people. It's time to proceed cautiously, and it's almost like the guys that throw big money around on Wall Street don't even read the notes or don't listen to us one way or the other. Macro stuff, and doggone it all, they should. Macro stuff on the government reports this morning kind of gives us an interesting mixture. If Paulson hadn't been so doggone reassuring about interest rates, this might scare the marketplace. Producer Price Index report, the annualized rate this morning for wholesale inflation, annualized 1.7%. June was up by only 0.1%, and the core was just flat. So inflation is not much of an issue, is it?
No, it's not. And for the core to be flat is really good. I mean, there was a consensus there. There's always 2 different consensus. It depends on whose consensus you're getting. But in one camp, it was expected to go up 0.1%. Another camp, it was expected to go up 0.2%. In either case, I think the report basically being kind of flat to even is a good thing.
And, it would normally give us some concern about whether or not we were going to get an interest rate decrease if we hadn't had 2 days of Paulson in front of Congress, not saying it in so many words, but pretty well making it obvious the plan's in place, and it's going to take an act of God to change it.
Yeah. It's so when's the Fed meet? Do they meet next Wednesday? Is that when we get the
I think we looked at the calendar and said it was going to be on the 23rd and 24th, but frankly, I don't have the numbers in front of me. It's this month and it's coming soon, and boy, is there going to be a change if they disappoint people, isn't it?
They definitely will. And it's going to be interesting to see if they come out with a 1/4 point or a 1/2 point, and if they only come out with a 1/4 point, what does that do to the markets? Are they really expecting 0.5% here?
Are you reading that somebody's actually baking in a 0.5 point expectation? I would consider that a real pleasant surprise to interest stocks and a few of us that are on the conservative side going, you doom coughs.
Well, some of the notes I was reading, not currently, but about a month ago or so, was talking about, a 0.5% now, a 1/4% later.
Holy crud. I hadn't caught anybody saying 0.5%, but you're much better read on the analysts than I am. That, like I said, the economist in me says don't do 0.5% because we need more tools given the oncoming recession that we're not going to be able to avoid, just don't know where, right?
Well, that's true, and we know it's coming. The question just always becomes when, and what's going to be the catalyst that sets it off.
Absolutely. Earnings season not really underway yet, but you did have one report from one stock that might have some interest level.
Well, I do. I have one stock, and it's not a common name. It's called Illumina. They're a biotech company. They do a lot of gene therapy, a lot of gene research, how it deals with cancer. But they had a pretty big miss in revenue. They haven't given their numbers yet, but they're kind of floating some stuff out there. And they're floating out their revenue number as a huge miss, about $50 million miss. And so they're getting beat up pretty bad today. They're down about 14.5% pre-market today.
Yeah, I do see them at the top of my loser list. Yeah, when you're going to miss, The rules say you got to give some guidance ahead of time so you can beat yourself up for a couple, 3 days before you give the real numbers, right?
Exactly. And so, hey, I was looking at next week, and next week, Monday's nothing exciting. Citibank will be the first bank really that comes out and reports before the market on Monday. But Tuesday, Dave, get ready. A handful of banks will be reporting. A lot of the big names will come out on Tuesday, and so we'll have a lot to talk about then.
Understood. Yeah, the entire financial sector generally leads the parade when earnings season begins, and Citibank's not a bad canary in the coal mine to watch because they've got a pretty heavy consumer-based blend in their customer mix, so it gives us a read on the consumer economy first.
Well, yeah, I'm seeing some downgrades though, like in Wells Fargo come out today, downgraded to neutral from buy. Um, Deutsche Bank actually getting a little bit of a upgrade from sell to neutral. So we're getting some changes in the expectations there.
It'd be interesting next week to watch the actual reports come in. Resetting the table for this morning, it was a big day yesterday on the Dow, up 228 points, darn close to it. Standard & Poor's bumping its nose on 3,000. We'll see if we can get past it today. It was up 6.84 yesterday. NASDAQ, the only loser, but it was a pink loss and nothing more, down about 6.5 points because, well, we're a little bit nervous about tech with all of the tariff issues we got going on. 45 minutes before real money gets thrown around, Phillip, what do things look like this morning?
Hey, on this lovely Friday morning, it looks like we've got green on the indexes today, Dave. The Dow is up 81 points, about 1/3%. S&P 500 up a little over 6.5 points, up about 1/4%. NASDAQ's right there with them up about 0.2%, $16. We've got gold and silver both trending down just a tad. And then crude oil is up about 0.2% to $60.29 a barrel right now. And I think a lot of that's probably due to a tropical storm out there in the Gulf of Mexico.
Yeah, once they reopen the offshore rigs, we'll find out whether we got a trend. Right now, we're not producing anything out of the Gulf right now for safety's sake. World markets, by and large, Asia was green ink when they closed early this morning, our time. Europe is a little bit mixed. Germany's off, and Great Britain is up this morning halfway through their trading day, and that's about a mirror of what they were doing yesterday, so there isn't much of a trend. Somebody needs some help trying to stabilize and predict and guess what's going to happen on the markets as it relates to a secure retirement for you and me. Phillip, how do I get a hold of you on the phone and get that advice?
Hey, Dave, to get ready for retirement, talk to us about coaching you to and through retirement. Give us a call at 382-0037 to schedule one of our financial x-ray analysis of your current situation. And then you can always get our free report on retirement strategies. You know, retirement's a one and done deal. You need to get it right the first time. To get your free report, text the word retirement to 863-285-3815, and then always join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
Which streams at newstalk730am.com like we do here at 1057lightfm.com. Phillip, thank you so much. You have a marvelous weekend, and we'll catch you Monday, all right?
All right, sounds good, Dave. Thanks.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be?
Hey, folks, again, I want to thank you for joining us today. And if you like what we're doing, please share this video with your friends out there on Facebook and like our page at Statler Financial Services. To get your free report on retirement strategies, text the word retirement to 863-285-3815, or you can click the link right here in this post. Have a great day, and I look forward to speaking to you again on Monday.